Imagine losing £20,000 because you clicked the wrong button on a mortgage application. That actually happened to someone in Manchester just last month, and it's one of 5 devastating mortgage mistakes that are absolutely crushing UK homeowners right now in 2025. If you're thinking about buying a house or remortgaging this year, what I'm about to share could literally save you tens of thousands of pounds. I'm going to walk you through the 5 biggest mortgage blunders that are costing people their dream homes and their financial futures. Some of these mistakes are so sneaky that even experienced property investors are falling into these traps. But here's the thing. Once you know what to look out for, these mistakes become completely avoidable. Let's dive straight into mistake number 1. And this one is absolutely brutal because it's happening to first-time buyers everywhere. The first massive mistake is rushing into a mortgage without understanding the true cost of variable rates in today's economic climate. Here's what's happening. People are seeing advertised rates that look attractive, but they're not factoring in how quickly these rates can change. In 2025, we're seeing unprecedented volatility in interest rates, and many borrowers are getting caught off guard when their monthly payments suddenly jump by £300 or £400. The psychology behind this mistake is fascinating. People get excited about home ownership and focus only on getting approved, not on long-term affordability. They're thinking about getting the keys, not about what happens when the Bank of England makes another rate adjustment. Smart borrowers are now stress testing their budgets against potential rate increases of 2 to 3% above current levels. Mistake number 2 is even more dangerous because it's completely invisible until it's too late. Too many people are ignoring the hidden costs that come with different mortgage products. We're not just talking about arrangement fees, though those have skyrocketed this year. I'm talking about valuation fees, legal costs, early repayment charges, and something called mortgage exit administration fees that can hit you years down the line. These costs can easily add up to £5,000 or more, and most people don't budget for them properly. What makes this particularly painful in 2025 is that lenders are being less transparent about these fees than ever before. They're buried in documentation that most people never read thoroughly. The savvy buyers are creating detailed spreadsheets comparing the total cost of each mortgage over the full term, not just looking at monthly payments. Now here's mistake number 3, and this one is breaking my heart because it's destroying people's credit scores without them even realizing it. People are making multiple mortgage applications within short time periods, thinking they're being smart by shopping around. But here's the brutal truth. Each application creates a hard search on your credit file, and too many of these in a short period can actually damage your credit score and reduce your chances of getting approved anywhere. Some people are unknowingly sabotaging their own applications. The correct approach is to use mortgage brokers who can search the market without impacting your credit score, or to carefully research and apply to only 1 or 2 lenders after thorough preparation. Your credit score is precious in 2025's tight lending market. Protect it like your financial life depends on it, because it does. Mistake number 4 is something I see happening even to wealthy, educated buyers, and it's costing them massive opportunities. Too many people are fixated on getting the lowest interest rate possible while completely ignoring the mortgage term and structure that actually suits their situation. Some buyers are choosing 30-year mortgages when they could afford 25-year terms, costing them tens of thousands in extra interest. Others are avoiding offset mortgages that could save them substantial money if they have savings sitting in low-interest accounts. In 2025's market, flexibility is becoming more valuable than ever. Some borrowers are discovering too late that they chose products without overpayment options, portable mortgages, or payment holidays. Features that could be crucial if their circumstances change. The smart money is looking at the complete package, not just the headline rate. The 5th and final mistake is perhaps the most expensive of all, and it's happening because people are making emotional decisions instead of strategic ones. Buyers are stretching their budgets to the absolute maximum, borrowing every penny they can get approved for without considering what economists are calling the perfect storm brewing in 2025. We're looking at potential job market instability, continued inflation pressures, and housing market corrections in certain regions. People who maximize their borrowing today might find themselves in serious trouble if their income drops or their property value decreases. The psychological trap here is that people fall in love with expensive properties and convince themselves they can make the payments work somehow. But smart buyers in 2025 are borrowing conservatively and keeping substantial emergency funds available. They're thinking about worst-case scenarios, not just best-case dreams. Here's what you need to do right now if you're considering a mortgage this year. First, speak to a mortgage advisor and get the full picture of costs and options. Second, stress test your budget against interest rate increases and income reductions. Third, protect your credit score by limiting applications and checking your credit report before you start the process. Most importantly, remember that in 2025's volatile market, the best mortgage isn't necessarily the cheapest one. It's the one that gives you security and flexibility when economic conditions change. Your future self will thank you for making these smart decisions today.